Half an hour away from the Opens in Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne, man with David Ingles.
Good morning. Let's get to your top stories today. Oil prices in focus on reports that Iran is ready to sign a deal over its nuclear program to get relief from sanctions, now potentially opening the taps for its crude exports into the broader market.
We're watching Tencent shares after China's most valuable company reported its best revenue growth in years. Alibaba is up next on the calendar, with traders focused on its e-commerce business and efforts to make money out of AI.
And I'm Stephen Engel, live at the APEC Trade Ministers meeting on South Korea's Jeju Island. U.S. Trade Rep Jameson Greer is here, among others, meeting with senior officials still seeking deals to avoid the worst of President Trump's tariffs.
Good morning again and welcome to the show. Weakness is perhaps the best indicator of across different assets right now. Weakness across equity markets, weakness across the US dollar, weakness across, as you can see, the bond space in the Asia Pacific. What is not here, probably coming up very shortly, bottom of your screens. We'll talk about this further a bit later on, is the 30-year yield in the US, right? 4.97, 5%, 5.11 in fact. We're about bad 2 or 3 sessions away, really, from taking that out. That effectively now puts us at the highest level in about 18 years. Anyway, we'll talk about that when we get there. A couple of other things to note. Oil prices, as you can see, coming under pressure. Shanghai crude should be also coming online as well. First you had crude supplies and inventory data coming out of the U.S., and then you have reports out of maybe us getting closer to a deal with Iran and what that could mean as far as the oil markets go. And, of course, on top of all of that, flip the boards, please. I'll talk about this when we get there. Taiwan, of course, is in focus today. You have Honhai and the guidance or the lack of it there. The Taiwan dollar could also be in focus today, as well as tech. Speaking of tech, Chinese tech, futures are pointing to the downside right now. And it doesn't seem to be, we'll be getting the Tencent offset, although that could change in the next couple of minutes or so. The Hong Kong dollar, the reason we have that here is we're not trading close to about 6-month lows, I believe. There we go. Thank you so much. Against the Chinese currency, that does affect, of course, things like flows and appetite for flows, either side of the stock connect. Very quickly, overnight, how did we do? Perhaps indicative of how we will do going into the open today. Tencent was up 3.5%. Tencent Music, this was really on the back of the earlier report coming through there. Watch JD. We'll see what happens. We'll probably see declines going into the open today. Golden Dragon Index managing to buck the trend, but it does seem, of course, this is perhaps Yvonne more backward looking. But we'll see whether the Tencent does provide us that sort of bullish offset today.
Yeah, you mentioned, right? The rest of the markets looks like this rally has shown some signs of fatigue, but maybe this earnings story can really kind of propel things further for HS Tech here today. Let's break down those Tencent earnings a bit more. So quarterly revenue grew at the fastest pace since 2021, and boosting expectations of the WeChat operator could weather a potential downturn this year. Let's bring in our Bloomberg Intelligence senior analyst, Robert Lee. He's with us right now. Some highlights for you, sir.
Yeah, there were solid results as expected, about 3% or 3.5% ahead at the operating level and also at the net income level. So it was a decent beat, but to say it wasn't spectacular, I think it was within expectations. It provides reassurance that this is a very, well-diversified business that should continue to avoid the worst of any tariff pressure. It's sort of steady as she goes. As you can imagine, there was some talk about AI, but as I think I've said previously, I admire Tencent for playing the long game on AI. They're not trying to overhype it. They're not going all in on AI. It is delivering some cost and efficiency savings, particularly in their ad placement and their games business. There was some talk on the call about that. But realistically, it's not going to have a transformative effect on their earnings this year anyway. So, this is a company that can grow earnings 10-12% this year. So given it's a huge tech Goliath, I think that's pretty good in this market. Tencent is a defensive business, and therefore you have a greater level of certainty in its outlook versus maybe some of its more volatile peers.
Yeah, it's predictable business, I think, to your point. What about, so I think on that very point, on the gaming business, what does a pipeline look like that? Is that as predictable?
Okay, if you remember back to a year ago, and also the year-over-year numbers were flattered by the base effect. Q1 last year in 2024 was very weak for them. Right. And they had some issues within their domestic gaming business that led to a reorganisation. And then if you remember, we talked for probably at least 3 months solid about DNF Mobile. That was last year's big gaming hit. So looking at the pipeline going forward, it's solid enough, but it's hard to identify any big potential smash hits, which is fine. So I think we'll deliver a steady year of growth within the gaming business, but it's hard to see where the potential standout target hits are this year. But again, for a company of this size and scale to grow sort of low double digits earning growth, I think that's pretty solid.
In terms of Alibaba later on, what are we expecting?
Okay, whilst it's going to be AI, that's going to dominate the conversation again. And Joe Tsai really went all in for AI at the last earnings call. They announced their sort of big bang on CapEx. I imagine we're going to hear a lot more on that. But I think if you take a step back from Alibaba, in reality, it's an e-commerce business. It's the recovery in their market share in e-commerce, which is really driving the earnings upside. AI is unlikely to deliver any meaningful level of earnings upside this year. That said, I think they will talk about their cloud business. They're seeing an increase in demand on that side. So essentially, cloud, they're providing compute and storage services to third-party companies who are developing their models. So I think that will be another highlight. But again, taking a step back, this is a company at the operating level will grow profit around 10% this year. That's a good number for a big tech Goliath. But I think compared to the Mag 7, back in the glory days when these companies were delivering 30% plus earnings growth, we're not going to see that from China's tech Goliaths.
Okay. Fantastic. Thank you so much, Robert Lee, there, of course. The debrief there as it pertains to Tencent and the preview on Alibaba. We're looking at Tencent shares. And by the way, this time, the next hour, Shawn Yang will be joining us as well. So Tencent is one of his favorites, one of his least favorites, JD, Meituan, and also Baidu. So we'll really understand what that spectrum looks like for them. Tencent is indicated now might be getting a price closer to 540 Hong Kong dollars a pop. So that puts us very, very near the highs that we hit back in February. Right. More on that, as we were pointing out, we'll be speaking there with Blue Lotus at those times on your screens. The open is in about 22 minutes from now. Right. Let's talk Iran, let's talk oil and the larger implications here.
Yeah, oil already making that sizable move down here this morning, and really watching what NBC has been reporting, right? That Iran is willing to commit to not having nuclear weapons in exchange for sanctions relief. For more, let's get in our senior energy reporter, Stephen Sapchinsky. He joins us now. And Stephen, just tell us a bit more. I mean, it seems like we're close to a deal, according to NBC. What does this all mean for oil prices moving forward?
Yeah, I mean, I think that there was an expectation over the last few sessions for oil. You saw sort of a bullish sentiment because Trump was taking a hard line and a harder stance against Iran. I think there was widely an expectation that it would be difficult for the U.S. to make some sort of compromise or some sort of deal with Iran, but it looks like, according to the NBC report, which cites a senior official in Iran, they might be willing to compromise on their side and get rid of their nuclear weapons. Now, if that's the case, they're asking for sanctions relief. Now, if there is sanctions relief, that means that Iran will be able to add more barrels into the oil market, an oil market that is already sort of dealing with a glut. OPEC Plus has already ramped up their supply. They've done that for the last 2 months, and they're planning to have another meeting in June 1st to potentially add even more barrels to the market. At the same time, there's a lot of questions about oil demand. Now, if you asked me about a week ago, 2 weeks ago, I would have said that the global trade war, is going to reduce demand for oil and oil products. That's a bearish element. Now that the trade war appears to be easing, or there are some hints that China and the U.S. might be able to make some sort of headway, then that could add maybe some oil demand. But the fact of the matter still is that there are a lot of barrels entering the market, and if there is some sort of deal with Iran and the United States to remove sanctions, they will be able to flow more crude to buyers, and that would be quite a bearish element. And you're already seeing that play out in the oil market today.
Have we heard anything, Stephen, from the sell side on how much downward pressure to the point you're making this adds to the oil price right now?
I think, when you look at the analysts, or when you look at Goldman or any of these other folks, there is a general view that we could be falling, for Brent right now, falling into the $50 range again, depending on where we stand with Chinese demand, where we stand as well as what OPEC Plus is adding. I think a big question, though, beyond just where prices are going, is how much will OPEC Plus actually pump? Because while they are accelerating their plans to add barrels to the market, the amount that they're actually adding and where countries are is a bit different. Countries aren't always hitting their targets. Either they're too much, they're too little. As well, a big question is, where does Russia stand in this as well? So there are a lot of different moving parts, but with Iran adding more oil to the market, we could see Brent back. We've got the prices right here. We could see Brent back down towards low 60s into the $50 level.
Stephen Stapp, thank you so much. Stapp Chinsky there in Singapore for us, our senior energy reporter with a fantastic context. And really the questions we should be asking really, as far as sort of within the members themselves, what do we do about excess capacity? Those sorts of conversations, right? In about just under 5 minutes from now, we'll be getting the renminbi midpoint of the day. Reason today might be sort of fairly relevant in a milestone, because yesterday we did get a weaker fix for the first time, then forecast rather for the first time, as you can see, in really many, many weeks. So we'll see what today looks like. And of course, yesterday was a catalyst for FX markets. Will that be the same in about 3 minutes from now? Counting down to the open of trade, Shanghai, Shenzhen, and here in Hong Kong, futures are challenged. Although when you look at the likes of Tencent, we are likely to see that provide your bullish offset today. We'll see what happens. 540 right now, give or take, is your pre-market. Plenty more ahead. This is the China Show. Good morning. Welcome back. Just to recap the credit numbers which came out, April credit numbers to be more precise, it came out yesterday, and not the best. So I think when you look at it on a year-on-year basis, specifically on new local currency loans, that was down about 60% from this time last year.
Way below average. If you look under the hood here, whether it's corporate borrowing, whether it's households, those two metrics look pretty weak. Compared to what you're seeing in terms of the government side of things. So that certainly is one thing that led to that drop. And so you got to wonder, is it the tariff impact that's really kind of, deteriorating confidence across the board amongst individuals? Also, when it comes to some of the campaign for the LGFV, debt swaps and like, that could have contributed to this data too. Yeah,
well, let's get a broader sense of really what all of that means in terms of how we should be thinking about growth currently and perhaps what growth looks like in the next few months. Fred Neumann is here with us, Chief Asia Economist and Co-Head of Global Research Asia at HSBC. Good morning.
Good morning.
You guys, I think, are at 4.3%, give or take, here on growth. How are you thinking about prospects right now? People have been moving all over the place. They moved down, and then up again, etc. Yeah, we just kept it at 4.3 because we made the assumption that tariffs will probably settle around 50%, not the 140+%. And that's ballpark where we're now. Obviously, if that will come down further, there'll be some upside to the growth forecast. But who knows? In this environment, right, we may see higher tariffs, lower tariffs. So for the moment, it's 4.3. But I think the big story is what you guys just touched on, which is that loans are actually down in April. And it just highlights that there's still these enormous headwinds for the domestic economy. And just because tariffs are down, that shouldn't give a reason to let off on stimulus, because the economy really, really needs it. And I think now investors are going to look even more at the domestic economy. They want to see signs of more stimulus, frankly, to come through in the coming months.
Yeah, you look at the stockpile of household loans. It basically was a sign that maybe they're just repaying the loans more than actually taking them out. What sort of signals does that send to you about the property market and when things could actually bottom out?
Well, it's already bottoming at a very, very low level, but it won't be a growth driver for any time soon. And really, the fact that you see consumers still pulling back on credit suggests that there's underlying a lack of confidence, if you will. And most of the consumer confidence surveys still show us that, right? We need the consumer to step up, because as exports inevitably slow, even with the lower tariffs, they're going to slow. They're still 50%. You need really that rebalancing towards consumption, and there hasn't been yet the real evidence that this is stepping up enough. Now, remember, May 1st holiday, maybe a little bit better spending at the margin, but it's marginal. It's not that sort of big push that you'd like to see.
Is there anything that's still missing, you think, from the current mix of stimulus, or have we just not waited long enough, I think is the other part of that question?
I think we still need to see more, to be frank. Now, there's a lot in the pipeline because we had fiscal policy easing early in the year, but remember that to some extent that's now negated by the tariffs. Even if the tariffs are not as bad as feared, they're still there and still going to drag growth lower. So in that sense, most of the fiscal stimulus that was put in has been absorbed by the tariffs, and so that raised the question, do we now need to add stimulus to actually get that recovery in domestic demand? And maybe the policymakers are going to wait until mid-year. They typically tend to reassess the state of the economy mid-year and then add something to stimulus. But of course, investors are very impatient and they want to see it as quickly as they can.
Yeah. How are you viewing this 90-day cooling period between U.S. and China? How is it going to impact the data for you in the coming months or so?
Another boost to shipments. Certainly companies are going to front load again, and so it's going to introduce a lot of volatility, and maybe that's a reason to say that actually second quarter GDP might not be as bad, and that reduces a little bit of the urgency for the government to then inject stimulus. But I think we should kind of look past this volatility and the on-off in trade, because the broader trajectory still is tariffs are higher than they were a year ago. The risk is still the U.S. is slowing, and so that means that the external headwinds are just going to increase. Remember, China comes off of 2 years of just rampant export growth, and that's not repeatable necessarily for third and fourth year. So we have to make sure that there is a backstop on domestic demand.
So where do we find growth then? And the question is really more broader for the region. You know, what's the pillar of growth which we can, I guess, lean on, for example, and do policymakers need to do more elsewhere?
They need to cut rates. I mean, rate cuts are very necessary. China already
they're coming
did that.
though already.
They're coming, but we might need much more than that. Remember, there's very little inflation really across the region. Energy prices are down, food prices are stabilizing. There's no really domestic growth too much in most of Asia. Even India, we see now inflation below 4%. And so what this means is essentially that the door is open for rate cuts, particularly in an environment where the U.S. dollar has kind of lost its strength, and so that opens the door for more rate cuts. And I would say earlier rather than later, because it's hard to argue for swift acceleration of growth over the second half of the year. If anything, the trajectory for the U.S., for China, is still marginally slower growth, and that takes a lot of trade growth off the table for many Asian economies.
The dollar story, do you think that continues to decline even if we see more of these trade deals come through from the U.S.?
I think the broad trajectory is, yes, the dollar is probably going to be a bit weaker over coming years, but that doesn't exclude, near-term bounce in the U.S. dollar. And particularly, the next thing the market's going to look at is the budget negotiations. So tariffs are one side. It's kind of baked in. We get a lot of noise around this. But are we going to get a big tax cut that's going to get, push up rates in the U.S. because economic prospects have improved? Is the equity market going to like that? Is that going to suck in money again? And so one might actually see the dollar bounce in the next few months, even if the, fundamentally over 2 to 3 year period, really the dollar has, it's gradually diminishing in terms of its centrality, its status of centrality, and people are going to look for alternative investments in euro and gold and Bitcoin and all of that. That's what's floating around.
People keep telling us the dollar had been or still is overvalued in some cases. What's the best indicator of the value of the dollar? How do I know if it's still fairly overvalued or not?
One way to look at this is the trade balance. That's one way to look at the trade balances. We have very large trade deficits, and in some sense you could argue that with such trade deficits it's not sustainable, and therefore the currency should weaken at some point. Now the trade balance is very distorted because people front load the imports, and so it's hard to say from month to month whether it's overvalued. But I think broadly speaking, unless there's a sharp reduction in trade deficits, it's hard to argue that the dollar is not overvalued.
Fred, thank you. Fred Neumann there, Chief Asia Economist and Co-Head of Global Research Asia at HSBC. We're going to talk about Tencent coming up here, and the shares already up in the pre-market after we did see the fastest revenue growth since 2021 for the tech company. And giving investors a bit more clarity in terms of the growth picture of this company as well, that they are in some way shielded from a lot of external threats and tariffs and the like. And the domestic side of things, the gaming business is still looking pretty solid. Shares up some 2% this morning. We got plenty more ahead. This is Bloomberg. stocks to watch here. The tailwinds continue when it comes to the tech sector. Take a look at the earnings that we got from Tencent, from JD yesterday. JD is coming off some of the optimism that we saw yesterday in the stock here, but Tencent is still up in the pre-market by about 2%. Alibaba is up next as well, so we are seeing those shares gain a little bit here, but Tencent set to open at that 2-month high in the back of those results. One stock we're watching out for is PopMart. Yeah, we're going to talk about Labubus. I got to talk about it. Yeah. Morgan Stanley lifting that price target for PopMart here. They're citing strong global demand for the Labubu V3, a faster ramp up in the Vietnam supply chain, and of course price increases in the U.S. Get this, they're saying
V3.
Yeah, I don't know what that is, but they're
like
talking about PopMart on the path to become a combination of Bandai Namco, Lego, and Disney. It's a growth story that is just in the early stages, they say.
That's crazy, though, how they're able to come up with that, those concentric circles, and that Venn diagram that somehow found itself with PopMart in the middle. But shares are what? We've gone from about $20 a pop this time, and we're now at 200.
Nuts.
So let's call it 10x over the last 12 months or so. The other big story, which is somewhat, I think, taking a back seat now, is oil prices, because this is the prospect of an Iran deal with the headlines coming through. 2.7% on Shanghai crude. We're down about 1% on Brent and West Texas. That's as expected, playing out across some of the energy counters. Not to the extent we're seeing the actual prices themselves. Right. All that said, a couple of other things that we're tracking going into the open today, including, by the way, some breaking news coming through on bond spreads. So record tightening in terms of we're looking at, short term, high yield and junk have now come in substantially, and we're now looking at a spread at a record currently. So we'll watch that very closely. We're looking at high yield bonds as well, and other things too.
There's a message coming through from the president, Xi Jinping. We're not sure where he's speaking right now. We'll confirm that once we do. But a message to the market in some ways, and saying that China is ideal, a safe investment place for foreign investors. So the president speaking directly to the foreign investor community here this morning. We'll continue to look at how things play out here in the earnings story. Your open is set up to be pretty positive, just especially in the tech sector, but we'll see how long this sort of risk rally can continue. We're pretty flat on the Hang Seng leading up to that open. This is Bloomberg. Welcome back. You're watching the China Show. We're counting down the open of markets. And yeah, there's been some bad data coming through overnight from the credit data. That's certainly one thing to contend with. But overall, this sort of risk rally that we've seen around this trade truce between U.S. and China seems to be getting a little bit tired now. So that's why we are seeing not a whole lot of movement in A50 futures here. Hang Seng's pretty flat in the pre-market, and your currency is back above that 720 handle as well. We're going to watch more on what this means in terms of fixing all that with Becky Liu from Stand Chart in just a few minutes. But yeah, the earnings story is certainly one thing. Could there be a tailwind, at least for the tech sector here today? Tencent delivering some pretty solid results.
The fastest growth since 2021, I think just about in the mid-teens when you look at that. And I think the Hang Seng, which is, to Yvonne's point, flat right now, would be actually much lower were it not for the early gains we're seeing in Tencent, which we've got, I think, about 2% in the early going.
Yep, the onshore market is looking like this here right now. We're down about 1/5 of 1%. Shenzhen also seeing declines about 1/3 of 1% right now. We're watching Shanghai crude in particular. So following that move that we're seeing across crude, Brent and WTI, after NBC reporting that perhaps an Iran deal could be in the works and be announced soon. So certainly the market has reacted. We'll see what the details are going to be. There has been some talk about how the nuclear sort of program is not part of this deal here and in exchange for that sanctions relief. You take a look at how CATL is doing that. Certainly we're getting more details of how this thing debut. Every day there seems to be a little bit of nuggets there on that company. And again, we're watching very closely the consumer sector as well. The credit data basically showed households, corporates, not actually borrowing here. The demand and the lack of confidence really is still out there amongst the sentiment there. Certainly one to watch in the Hong Kong is the earnings picture. So we talked about Tencent. So that's delivering some solid growth there. We're watching very closely the AI story in Alibaba as well. They're up next. And when does the AI investments, the heavy transformation that Alibaba is trying to go through, becomes some sort of growth multiplier, right? That's going to be the key story there. The shares are moderately higher this morning, but the rest of the tech space seems to be edging lower. The likes of Xiaomi, Baidu had a really good run the last few days. We're seeing that come off now, about 0.8% to the downside for Baidu. But Tencent still looking okay. We're up about, well, we're down, back down.
Okay,
now.
there we go.
There we go.
Live TV,
Tech,
folks.
Being that drag this morning. You take a look at some stocks. We talked about the oil story, so that certainly is going to be a key sector to watch here this morning. And these China oil stocks are following the price of crude lower there. Also watching some of these, PetroChina is down a third of 1%, but it's a pretty mixed bag right now. And we're watching, of course, some listings that are coming through.
Yeah,
so it's not just CATL. Jiangsu Hengrui came out with some news recently too, Dave.
We're looking at a price range of 41.45, that's Hong Kong dollars, up to about just over 44 Hong Kong dollars a piece. 225 million shares, you do the math, and at the very top end, if they do price at the very top end, and by the way, we'll talk more about the CATL, which there's news on that too. Could be about 1.3, that's billion, that's US dollars at the top end. And of course, I think they did just close the order book on CATL, I think midweek. And I think the guidance we're getting is at the very top end, 263, if I'm just racking my brain right now, as far as that is concerned. Right, we have some Aussie employment numbers, which I'll just glaze over because these tend to be very volatile anyway. So coming in slightly higher than expectations, but yeah, we'll talk about that later. Not really globally relevant at this point in time, but it does tend to move, of course, some of the assets there, like the Aussie dollar, I believe, is catching a slight bid as we speak. Right, back to Tencent. What are we doing here? So fastest revenue growth since 2021, charts coming up on your screens. Shares, as we were pointing out, were up, now not. And yeah, let's get a sense of how this affects trading today. Let's bring in Catherine Nye, who leads our Asia stocks coverage. She's here with us in her studios to, how are you guys looking at Tencent today? And earnings, broadly speaking.
Earnings broadly. I mean, I think the hot words here is deployment and monetization. And that's just been sort of the question, the big question mark since DeepSeek came into the market, right? Everybody said, this is a game changer. This is going to really, not just change tech, but really all aspects of this economy. But this has been, 5 months now, and we're still at the same question mark, right? Deployment. And I think that even on the earnings call, one of the executives in Tencent had said the same thing. This is unprecedented in terms of how people are viewing deployment of AI, but this is still a question mark for many people. And we saw here with Tencent, right? They spent a little bit more. The net income part was a miss because they spent more on AI and marketing. This will be the question mark over Alibaba as well. And I think that even though the analysts were quite bullish about the results, right? This was a pretty spectacular earnings result, I think, especially given the last couple of years. This question mark and as well as the China macro picture still kind of are weighing on and the overall kind of outlook.
What is your team focusing on more today? Obviously the earnings is one thing. Are they going to be enough, the tech sector and these earnings, to really continue to drive this market higher?
Absolutely. I think that right now it's about catalysts, right? We've gone through the ups and downs of tariffs. Will there not be? Yes, there is kind of a little bit of a delay, and the geopolitical is I think no one can do the actual math on this. But right now it's about what comes next, right? Is it about some sort of easing measures from the government, from Beijing, to kind of open up the market more? Is it going to be something macro that's going to fuel it? Is it going to be, earnings? And we already saw JD this week. We have Tencent and then Alibaba tonight, and there's not really very much more in the earnings catalyst. So now the question is, what happens next? Is it going to be the next, AI development? Is it going to be, the likes of what kind of, I think, Baidu and Robotaxi this week? Is there going to be something of that nature that's going to really propel us forward? Is it going to be a stimulus package? Is it going what is the next shoe to drop? And I think people are kind of reading the tea leaves about that. And there's not many catalysts that we can kind of put our pin on. And so I think that's why it's causing a little bit of a cloudiness. Still, these stocks are up huge this year, right? Looking at Tencent and Alibaba, 50, 20, exactly, 20, almost 50% on the latter, right? Yeah. It's still really strong, but to get that continued upward momentum, you're going to need something to really hang your hat on, and there's just not a lot.
Yeah, here you go. To your point, 60% on Baba, Xiaomi's 45%, 25% year to date. Fantastic, our producers, getting that one very, very quickly. Thank you so much for that. To our producers, and also Catherine Nye there, who leads our Asia stocks coverage.
Yeah, let's bring in Becky Liu now, head of China macro strategy at Standard Chartered Bank. Away from the earnings picture, but really talk about the macro stuff. Because there's been a lot of talk about the currency, given that we're back below 720, around those low levels now, levels back to maybe pre-Liberation Day. Where to next for the currency now?
First of all, we definitely don't think currency is part of the trade negotiation deal.
Okay.
We have been monitoring the fixing quite closely these days. So with only one exception, which is 2 days ago, right after the announcement of the joint statement, that fixing was very obviously stronger. But subsequent days, fixing has been actually very stable, regardless of how dollar move, regardless of how other parameters in the model move. So in our view, is that China wants to show some goodwill. So if tariff level is almost back to pre-reciprocal tariff days, then fixing has also been brought back to those levels. So in the foreseeable future, we think fixing is going to stay very stable. And from the dollar CNY's perspective, we see very little a chance for the CNY to be appreciating in a sustainable way. So put it another way, we think it's hard for spot to be staying sustainably below fixing. And once dollar rebounds a bit further, we might see a bit further upside for dollar CNY. So at the end of the day, the rate differential is too obvious, especially when PBOC might even be cutting faster than the Fed again.
Yeah, that's fairly substantial. You mentioned something there interesting, too, that you don't think a weaker dollar is part of any of these individual negotiations taking place. Why do you think that's so? And if that's the theory, what do you think is behind the dollar weakness we've seen?
There are a number of reasons. With China's perspective, China would definitely not be sacrificing anything that hurts its long-term competitiveness or fundamental in reaching a deal with the U.S. And as what we are seeing so far, like even after this joint announcement, quite a lot of restrictions are still there. I think it's equally important for what's not mentioned in the joint statement as what's mentioned there. So first of all, TikTok is not mentioned, and second, there's no specific information about relaxing the restriction of rare earth exports, which would be the pain point from the U.S. point of view. So if they are not even agreeing to stuff like this or to things like TikTok, it's highly unlikely for them to include currency exchange rate as part of the trade negotiation. And on the flip side of things, from the U.S. perspective, when we look at the latest data from the U.S. government, net interest payment for U.S. Treasuries is now the second largest payment item for fiscal expenditure so far in the 2025 fiscal year. And people are questioning about the fiscal sustainability, whether they're able to create enough room to for tax cut in the second half of this year. So it means a weaker dollar would actually worsen the situation rather than a stronger dollar. So from the U.S. perspective, we also doubt whether it really want a much weaker dollar simply from the perspective of export competitiveness of U.S. goods at this stage.
And you're keeping your forecast at 7.5 then for the second quarter.
Yes.
Others have talked about 7.
Yes.
Yeah.
Well, we do see some downside to our current forecast, like given how weak dollar had been, and that was beyond our expectation.
Right.
But we definitely don't think dollar CNY will go 7. The exporters will be under tremendous pressure. They are already going through so much margin erosion. If you do see a material appreciation of the CNY, their situation would be disastrous. So we don't really think there will be a sustained appreciation of the CNY.
You mentioned something early on, and I'm going to get to that, the Hong Kong dollar and the PEG, and that also goes into the rate differential that you put out earlier on. What do you think is going on with the Hong Kong dollar, and why is HIBOR? Why does it keep falling? Which is a good thing, by the way, right? If you have a mortgage here, but yeah.
Yes. So basically, overnight HIBOR is now falling to next to 0.04%,
right,
while SOFR rate is still holding up at 4.3%.
Yeah.
So the rate differential is now more than 400 basis points. And the reason is because dollar Hongki was hitting the strong side of the band at 775, and after 4 intervention by the HKMA, the aggregate balance went up by almost like 4 times. So basically, the total amount of Hong Kong dollar liquidity almost quadrupled almost in a matter of 1 week. So that's almost like the supply of Hong Kong dollar liquidity. Yet the demand side, it's failed to catch up. Even when you have slightly larger size IPOs, it will be uncomparable with the previous IPO size after the regulatory change, which will be capping the maximum amount of margin financing for those IPOs. So all in a sudden, your supply of Hong Kong dollar went up massively, but the demand is not catching up, and therefore Hong Kong dollar rate is very low at this stage. And we believe Hong Kong dollar liquidity is going to stay very fresh as well. So what that means is that that dollar Hong-Kong in terms of spot will likely to trend further higher. Now it's already at 780, but we need to remember that not until it hits the weak side of the band at 785, then the HKMA will start to mop up Hong Kong dollar liquidity.
Yeah.
Yes.
Well, I mean, does it seem like we will get to the weak end of the band at this point in time? Like, is that even do you think, a scenario that the HKMA is, I guess, projecting over the next few months?
It's not impossible, given how flush the liquidity would be and how attractive all these carry trade would be. But I think people would still be quite careful about that because there have been a lot of stop-loss flows on the long one-year dollar Hong-Kong outright. People thought when the one-year outright is at 768, 770, hitting the like much lower than the strong side of the band, it's a no-brainer trade. Yeah. But actually, when you look at the points currently at minus 1,000, the one-year outright forward will likely to stay below the strong side of the band for an extended period of time. So from HKMA's perspective, they are not in any urgency to really proactively intervene the Hong Kong dollar in terms of both liquidity or even spot. They could just let the current mechanism work and let spot move to 785 so that they mop up a little bit of liquidity so that Hong Kong dollar versus US dollar interest rate differential would narrow to gradually stabilize the whole situation.
I wanted to get your take on the credit data, which wasn't looking good for April. Does that mean the PBOC or policymakers need more stimulus? Or now that we have a trade truce that we don't really need that much of a stimulus?
We believe they definitely need a lot more stimulus. The April data is awful. If you look at April new loan data alone, it's the lowest since 20 years ago, 2005, if you look at just the April data. And if you look at year to date, and if you strip out all the distractions, for example, very strong government bond issuance or bill financing, look at the loan itself, which are much more correlated to actual economic growth, it's down by 10% year to date. So it's a set of extremely weak credit data, which means that the overall credit demand, which would be the driver for the economy, is now started to fall quite rapidly. And even when we look at the tariff rate, at the end of the day, the average import tariff for China, it's up 30% year to date. And if we remember, during the last round of the trade war, after more than 1 year of tariff imposition, the weighted average effective tariff rate was under 10%. So we're all of a sudden adding another 30% year to date, and that would lead to a lot of still rerouting of the trade globally. So in the short term, we might see some release of pressure, but after that, everyone will still be looking for alternative suppliers.
Which makes me now wonder, I'm looking at the Chinese 10-year at 167. Shouldn't that be lower, given the outlook you've just outlined and underscored for us there?
We believe it should definitely fall further. So on the back end of the China rates curve, our view has been very firm. It's buy on every single rebound in yield. And we are still keeping our 10-year CGB yield forecast at 130 at the end of this year.
Wow.
Okay. Well, Becky, fantastic. I think we covered everything there. Becky Liu, head of China Macro at Standard Chartered Bank. Yeah, we'll be live, by the way, out of JP Morgan's annual global conference taking place in Paris later today. And yeah, we have, I think, a fairly big interview, I think, coming up. There we go. Jamie Dimon joins us at those times on your screens. So if you're watching out of Hong Kong, that's about 8 p.m. That's today, 8 a.m. if you're watching out of the U.S. East Coast. Plenty more ahead. This is The China Show. Welcome back. You're watching The China Show. Let's talk about trade now and geopolitics, shall we? So you have, of course, the APEC meetings. You have Japan's top official skipping that specific one that takes place and begins today over in South Korea, potentially missing this opportunity to advance talks with the U.S. on a tariff deal. Let's bring in Stephen Engel, our Chief North Asia correspondent. He's covering the meeting for us at the venue in Jeju. Steve, yeah, so things are, I guess, kicking off right now. What can you tell us about what's going on and what's on deck today?
Yeah, things are just kicking off here in Jeju, but the time is also ticking for the 90-day reprieve, of course, the truce that everyone's been talking about over the weekend in Geneva between the U.S. and Chinese delegations. And one of the key participants there is the U.S. trade rep, of course, Jamieson Greer, who is here. We saw him arrive. He was one of the first ones, in fact, to arrive here at the convention center on the southern side of Jeju Island, of course, the big resort island of South Korea, which is hosting the trade ministers' meetings of APEC. And there he is getting out of his car. He told us, quote, "We are not doing media now," but he'll be here over the next couple of days. We also ran into the WTO Director General Ngozi Okonjo-Iweala. Perhaps she will be gracing her presence on Bloomberg Television later as well. It's all fluid right now, figuring out what exactly the delegations will be from the 21 member economies of APEC. We're hearing, as you just said, David, that the top Japanese trade officials are not going to be here. We're hearing as well that perhaps the Australians are sending a smaller delegation. But then again, the Malaysians are here. The Vietnamese just walked past us a few minutes ago. A lot of these Southeast Asian, the so-called China +1 nations are here, and they're likely going to try to get FaceTime with Jamieson Greer following this trade truce between China and the United States. Where does that leave the China +1 grouping of Southeast Asian nations and others as they try to negotiate as well down during this 90-day reprieve that all the nations got, from those reciprocal tariffs? Vietnam, of course, getting one of the highest rates on April 2nd of 47%. Malaysia, 24%. Of course, they've all been knocked down to 10% for now. But as I said at the top here, the clock is ticking on them to get some sort of unilateral or bilateral deal with the United States.
Steve, it looks like there's some progress, at least on the U.S.-China side, when it comes to the fentanyl issue. I mean, there's still that 20% tariff that the Trump administration has placed on imports from China. What's the latest there?
Well, yes, that is something I would definitely want to talk with the Vice Commerce Minister of China, Li Changgang, who is here. We saw him yesterday. He arrived on the same flight as our producer from Beijing. So he is going to be leading the Chinese delegation here. And we all want to know whether there's going to be FaceTime between Jamieson Greer and the Vice Commerce Minister, who is essentially China's trade rep, Li. They had interesting conversations, obviously, in Geneva. And that fentanyl issue is one that still kind of sticks out like the sore thumb because, again, China has reciprocated by pulling back on its tariffs, its reciprocal tariffs, also reducing those by 115% as the United States did. The U.S. goes from 145 down to 30. China goes down to 10. But that 20% difference is the fentanyl issue. Where can they reach common ground on what the United States wants China to do to address the fentanyl issue that will appease the concerns of Donald Trump? So, again, those are some critical elements to see, again, comparable tariffs from the United States on China and China to the United States.
Steve, thanks for that. Our chief North Asia correspondent, Stephen Ingles, reporting from Jeju here this morning. We got plenty more ahead. This is Bloomberg. Here are some of the geopolitical stories we're following for you this morning. Indian officials say trade talks with the U.S. remain on track despite their tougher approach in negotiations. The Modi government this week threatened to impose retaliatory tariffs on the U.S. in response to higher duties on steel and aluminum. We're told a first-stage deal is still expected within a few months. Russian President Vladimir Putin has named a group of low-level officials to join peace talks with Ukraine in Turkey, giving no indication that he plans to join the negotiations. President Zelensky had challenged Putin to meet him for talks in Istanbul after the Russian leader offered to resume direct talks to end the conflict. Earlier, President Trump downplayed the chances of visiting Turkey, citing a packed schedule.
Right, just for a look at markets, we're looking at the Boeing ecosystem here in the Asia Pacific. You have some of their suppliers listed in Greater China. You have a lot, of course, listed in Japan, and to some extent in South Korea as well. So I think Huni Technologies is one of those sort of Boeing suppliers. We're up 1.1. So I think we did see fairly more hefty gains about an hour back, and we've since petered out. But I think the underlying story here is Boeing is back to some degree, and of course certainly following the news flow and that record air deal with between Qatar and the United States, the largest in history. How does that really affect tangibly the outlook moving forwards? Markets seem to be fairly encouraged, but not completely unbridled optimism. Neither. There. Speaking of gold, and one of the trades, of course, that had been fairly consistent of late on the way up, that's really unpeeling even further right now with the gold price, as you can see now, below the 3,200 level, and as you can see, some of the gold-related plays in Greater China are seeing some declines as well.
Yep. So the broader benchmarks are doing this year right now. We talked about that the earnings story might be one thing to focus on, but really, it's interesting too. The onshore markets are still heading lower. Goldman Sachs had an interesting note here, raising their China index targets. So MSCI China back to 84, CSI 300 4,600. Those are back to the pre-April 2nd levels. You're watching the China Show.
Welcome back. You're watching the China Show. We're just going into the second hour of the program here. First 30 minutes, and as you can see, we're coming off lows a little bit there on the Hang Seng Index. We started off the day slightly to the upside, and that really was down to Tencent and a very few constituents managing to hold the forts, but Tencent has since up 2% at one point, has since come in flat, and I guess that's really why we are seeing declines in the order of the amount you see on your screens. Right, just very quickly, in fact, on Tencent itself, it's not so much Tencent, but Tencent Music, actually, that's seeing the upside right now, 7.5%. It was a double-digit move overnight. It's unsurprising. You're seeing a follow-through in the Asia-Pacific. PopMart, this is an upgrade coming through out of Morgan Stanley. And them really unpacking what the company really is to them, right? I think it's a combination between Disney and certainly other things. Just keep in mind, right? The shares have almost gone up, I would say 10x over the last 12 months or so. Meituan continues to see some downside today, including JD.com. So that's really a separate Chinese consumer-facing tech story, which we'll get into. I'd seen about 4 or 5 minutes with Shawn coming through out of Arete, talking to us about Tencent and also Alibaba as well. Right, very quickly, the rest of the region is similar to what we're seeing in China, right? So really a lack of catalysts. We're looking at weakness almost across the board, not a lot. So you have weakness in equity markets, you have weakness across the bond markets. We did have some of the employment numbers coming through about 30 minutes back coming out of Oz. Full-time employment coming in slightly higher than expectation. Well, not slightly, higher than expectation, but that tends to be very difficult to predict in any case. 30-year yield, 4.97 is where we are right now. So 5% is a bad day away. I think the 5.11 was the high we hit back, I think, in 2023, which was the high of the cycle, is a bad 1 or 2 days away. 2-year yield, 4.04. As you can see, the 10-year now has a 4.5 handle on that. And, of course, the other separate story is the weakness we're seeing in oil prices, that stockpiles data, including now the data today, the prospect of a deal out of Iran and what that might mean for this already quite somewhat oversupplied global oil market if we do see more Iranian supplies coming to this market. That's a long way of saying there's nothing much happening, but there's lots to watch moving forward. Mark Cranfield is with us right now out of our MLive team to I guess, humor us, Mark. There's nothing going on today. What's top of mind, though, for you?
Well, interesting that you're talking about the Treasury yields there, and that's a global negative feedback loop that you see happening, because yes, Treasuries are going up for some of their own reasons. Obviously, investors are becoming more confident that the US economy will have a better second half of the year than they were previously expecting. As people dial back on the tariff war, that means that there's more chance of normality in business in the United States, which means better growth. The risk of recession is certainly going away. More reason for the Federal Reserve not to change interest rates. So that's all feeding in to higher yields, particularly at the long end of the curve, where people are also concerned that the US hasn't really got to grips with the whole deficit issue in the United States. They don't really have a great plan for reducing the deficit. There's a lot of things up in the air, but nothing really that investors are very impressed with. Now, on top of that, you have the global impact as well, because it's not just the US in isolation. Yields are going up quickly in Europe, particularly in Germany. They're going up in Japan, where there are similar issues because Japan and Germany especially need to increase defense spending a lot because of the push they're getting from the United States and NATO and various issues on them being alone to spend money there. So that feedback is going into the Treasury market as well. It's almost a vicious circle, and it's not going to be easy to break that unless the US Treasury can come up with a very concrete plan to say, we've got this all under control and we deserve to have a premium compared to other markets, which is not the case for now. Now, the really interesting thing about those rising US Treasury yields, they're not supporting the US dollar very much at all. What you're seeing is small gains in the US dollar, but they're quickly reversing. You can see that the little bit of strength we had at the dollar earlier in the week is already reversing, particularly against the yen and the euro and most of the Asian currencies as well. So treasuries are pretty much going off in their own direction. Global bonds are going off their own direction. And this story about the US wanting a weaker dollar just will not go away.
Yeah, that's really curious. I'm still trying to wrap my head around that because, Mark, that's something we don't normally see, right? At some point, you get dollar bids coming in, and especially at these levels when it comes to yields, right? So how do we need to be thinking about? Well, we did get past tense a short-term bounce in the dollar, but how much more downside do you think is really ahead of us in the next few weeks or so on the dollar?
It's probably going to be a long, gradual process where the decline that really began at the start of this year is going to go on for some time. And it's a combination of factors. Clearly, even though there's lots of denials, especially from Asian central banks and finance ministers, that they're not using their currencies as a negotiating tactic with the United States, traders don't believe it. They're obviously positioning, expecting that at some stage the currencies will be used. And then on the other side, you've got a lack of credibility that investors feel about the way the US dollar is being handled anyway, and that the fact that the US is not really committed to this strong dollar policy anymore. And the last thing the Federal Reserve did, obviously, was to lower interest rates. Now, they might be delaying lower interest rates, but of course, there's still a risk, and people are still pricing for 2 rate cuts later this year as well. So from the US side, it's slightly negative, but from the Asian and from the rest of the world side, clearly the positives are building up for their currencies. And look at what the PBOC is doing. It's gradually steering the yuan to be slightly stronger. Not very fast, but the fact that they're changing direction. Just a couple of months ago, they were very clearly pushing the yuan to the weak side. Now they're gradually allowing it to go to the strong side. That means other Asian currencies will follow as well. Plus the euro is getting support from all the spending going on in Europe. So clearly the balance is shifting. People want to hold other currencies, not the US dollar, and they're shifting, not fast, but it's gradually happening. And it's unlikely to turn around unless something very quickly changes in terms of the US, particularly from the fiscal side and their current account side. None of that looks as though it's going to happen quickly. The twin deficits in the US look as though they're going to be there for a long time yet.
Mark, just quickly, your thoughts on oil. We're down 2% across the futures curve. And, is this the Iran story? Is it the fact that we had seen oil come up 10% and then we got the Iran story? What do you think is going on here?
I think the big picture here is pretty much what our story about Goldman Sachs was yesterday. Goldman Sachs analysed all the comments from Donald Trump over a long series, and he seems to think that the right price for oil is below $50. As long as somebody as influential as President Trump thinks that that's the right price for oil, and he talks about it a lot, it's going to be very hard for the market not to go in that direction. We'll see short-term fluctuations. Some days there'll be talk of more supply, more demand, but in the end, if you've got one of the most influential people in the world pushing for oil prices to be a lot lower, guess what? They're probably going to head in that direction.
Mark, thank you. Context there. Mark Cranfield in Singapore for us. Right, now let's turn our attention now to Chinese tech. So we had this week, right, a lot of big earnings have come through. You had Tencent yesterday afternoon in the Asian time. And then we are going into the results coming out of Alibaba later today. So just some context here, particularly on Tencent, right? Because slightly surprised to the upside. We did speak with CLSA earlier on, Eleanor Leung. And really, here's how she framed the Tencent story in their view.
So we expect that Tencent revenue top line growth is going to be sustained teens % growth that will remain very solid. One is because they have a lot more games now they can launch in the market, and also because the empowerment of AI, and that can boost the top line growth revenue.
Let's get more now on the Tencent story and bring in Shawn Yang, senior analyst at Arete Research. Shawn, good morning. I know you're a Tencent bull. You have a buy recommendation in the stock. I think you also increase your price target, which we'll get to in a moment. But what stood out to you the most from these earnings?
Well, I think that all three business lines seems to have solid growth, especially gaming. I think gaming is impressive. Basically, jumps from more than 20% year-on-year growth. Considering Tencent's like the total revenue size of gaming, that's kind of like remarkable. I think advertising also has 20% year-on-year growth, partly driven by the ad load release, partly driven by AI. Definitely, I think that the investors waiting to see more AI stories because Tencent has already put a lot of in CapEx, mentioned a couple of times. They have some applications in AI, but I guess that's the revenue contribution from AI is still relatively limited for Tencent.
Yeah, Shawn, we spoke with our another analyst this time in the last hour, and effectively the message on Tencent from them was that Tencent is a defensive play because the business is very predictable and it's doing well. I'm just wondering, you mentioned the core business can expand. If you can expound a little bit further on that, and is the outlook, the earnings outlook for Tencent visible at this point in time, looking through the next few quarters?
Yeah, I think that's a correct statement, because if you look at Tencent, basically it has very limited competitive pressure from other peers. For example, if you look at e-commerce, there has always been this competition. Now the food delivery, people used to think it's like matured market. Now JD and Meituan are putting more resources to that. But if you look at Tencent, basically all its three business lines, gaming, it's gaining market share. Advertising, I think it's also gaining market share. Plus, people can wait for its AI story. So yeah, I think, and also the other thing is that Tencent has usually well managed the revenue growth, the profit growth. Last year, I think that the profit growth exceeds revenue growth a lot. But this year, probably I think that's the in terms of margin expansion, probably there's still some margin expansion, but not as huge as it was last year. But anyway, I think Tencent's story that if you basically don't have strong competitor, then your revenue, your outlook can be more visible comparing with other peers.
Okay, just your call on the stock price. I think you raised your price target. The street consensus is around, I think, 640 or so. And when do you think we get back to above 700 here on Tencent?
Well, I think everybody hopes that Tencent can be back to 700, but I think they probably still need to take some time, right? Because as I said, that's the next driver should be AI. But so far we have seen some achievements, but not huge. The other thing I think is that I think for Tencent that you probably need to wait is revenue growth, profit growth, because so far it's I think it's basically low teens in revenue growth, and that means that you probably need for some year for this profit expansion and can raise its PE. So yeah, I mean definitely if you can reach to 700, everybody will say that's a very good thing. But I think we need to be patient.
Okay, now we talked about food delivery. I need to get your thoughts on that, because that's when you look across the Chinese tech space, almost everything has done well, except for the Meituans and the JD.coms of the world. The competition between the two, what do you think will eventually happen there? Is Meituan's dominance at risk, and would you be avoiding those stocks for now? What's the advice?
Well, we cut both stocks target price a little bit to reflect the recent intensified competition. I think that in the long term, I think that Meituan definitely has a lot of experience in food delivery. It has very intensified, it has very well-developed rider network. It also has a lot of merchants and consumers mindsets of food delivery. So I would say Meituan is still going to be the one that with the largest market share. JD is ramping up very quickly, but I think that there are a lot of challenges for JD after that. For example, how to attract more customers, how to maintain these merchants, and the most important thing that how to match your order volume with the riders, because food delivery basically is a very complicated business. It requires well balanced between three parties. So that's not something easy for JD. I would say that JD probably can take some share, but it's still not enough to challenge Meituan's dominant position.
Okay, Shawn, apologies if we're jumping stock to stock, but there's really lots of coverage underneath, underneath your book here. So I need to ask you. Let's talk about Xiaomi now. I think my big picture question for this is: do you think, and shares have done exceptionally well, what is the execution risk here from the company's perspective? And is it a car company in your view, or is it a tech company?
I would say it's a tech company because definitely the car has basically. The high PE, the high valuation comes from a car, but I mean, smartphone still contributes the largest percentage of revenue. And the other thing is that there's high synergy between these three business lines: the cars, the home appliances, and also the smartphone sales. So I mean, I think it's a tech company. And if you ask about risk, I think that recently there has been some noise on social media because Xiaomi is very famous for its marketing strategy, but that brings some risk because any problems and issues with the cars or with other products can be exaggerated on social media. So that's probably kind of a risk for Xiaomi.
Yeah, I think your price target there is 49. You've raised that from 39 Hong Kong dollars. So I'm looking at your latest pecking order. Tencent is one of your favorites. We'll get to Alibaba in a moment, which is right in the middle. Then it's JD. Baidu is your least favorite. What's wrong with Baidu in your view, Shawn?
Yeah, I think that every time I come to your interview, seems that Baidu is a company that you always like to ask, because I think mainly because Baidu, I see that is facing a lot of challenge from not only from AI. Definitely AI, I think provides I would say a more user-friendly way of searching information. The other challenges coming from a lot of other apps like WeChat, Tencent also mentioned search in their earnings, and also Red Notebook. A lot of young people are using Red Notebook to search for information, and also definitely Douyin, because it provides a different angle of searching. So I mean, I think that search, fundamentally speaking, is a way to just find information, to summarize information. But in terms of this, the user experience, I think that Baidu is facing a lot of challenges.
Okay, Shawn, NetEase is reporting today, as with Alibaba. I think you're more bullish on Baba than you are NetEase. Tell us, what are the two big things for both companies to watch today?
I think for Alibaba, the two major things are, first of all, it's core e-commerce performance. Because last quarter, the core e-commerce actually growth accelerated a little bit, mainly because it has very good GMV growth, and the take rate increased a little bit. People are waiting to see whether this could maintain. The other thing definitely is about cloud growth, because it's the first quarter we are going to see how DeepSeek or China's AI can help Alibaba's cloud business to grow. Generally speaking, people would expect that the Ali Cloud's revenue growth can accelerate this year, but the problem is that how much. That also is very important because that relates to investors' confidence to the whole China AI space. I think for NetEase, I think that's basically people are tracking about its gaming performance. And the other thing that people probably want to compare with NetEase and Tencent, because some people would like to do a pair trade here.
Shawn, thank you. Shawn there, Senior Research Analyst at Arete Research. I think we got through everything. Thank you so much for the time. Right, okay, some breaking news here, and this is based on our reporting here. So we're talking about Starbucks. So the company is said to be beginning this sort of road and process to effectively revamp its footprints in China. We understand it's contacted several PE firms, tech companies, and others as it considers its options. And based on how that's phrased, it's perhaps looking at a transaction potentially here. It sent out letters via a financial advisor to several potential investors this week to solicit views there on really the business, how to grow it, and perhaps what the options are moving forward. Full details, of course, coming through very shortly later on. But you can read all about that on your Bloomberg terminals right now. Plenty more ahead. This is The China Show. Right, just to recap the new loans that we got, the credit numbers, not really a very good set of numbers here, down 60%. It came in, as you can see, below half of where the estimates were pricing at 700. Maybe context is important here. Let's bring in David Chu out of Bloomberg Economics to tell us really, credit demand has yet to pick up. So what's your takeaway from the numbers out of the PBOC?
Well, I think usually the new year loans drop in April because of seasonality. Banks slow paces after a quick growth in the first quarter. But for this April, I think the seasonality cannot fully explain the drop in the new year loan, especially if you look at the household loans. That is really bad.
Okay, we spoke with Becky Liu from Standard Chartered yesterday. Oh, not yesterday, in fact, sorry. My brain is a bit too forward. A few minutes back. Let's play it out, guys. So let's read some context here on how she thinks the April numbers did pan out here for the Chinese economy.
The April data is awful. If you look at April new loan data alone, it's the lowest since 20 years ago, 2005, if you look at just the April data. And if you look at year to date, and if you strip out all the distractions, for example, very strong government bond issuance or bill financing, look at the loan itself, which are much more correlated to actual economic growth. It's down by 10% year to date.
David, what do you think the April numbers are going to show in terms of activity numbers, and how does it go into maybe possibly more front-loading because of this 90-day window now?
Well, I think, yes. If you look at the April number, it means that the activity slowed significantly compared to March. But I think it's more, we look at the April data, it's more a backward-looking thing, and what we need to know is the future. And now we are a bit optimistic over the activity in May and June because of the agreement between China and the U.S. We think that it lifted the sentiment, and producers can start to produce again. And of course, they need to borrow money firstly, so that the credit number should go up in May and June. But still, we need to be cautious about the longer term because it's only a 90-day window, so it's not for lifetime long. So, I think the people are still kind of cautious or concerned over the longer term agreement or the treatment between China and the U.S.
David Chu, fantastic. Thank you so much, David Chu, our Bloomberg economist there. If the future was impossible to predict, it's even more so right now. That's even possible if you think about it. Plenty more ahead here on The China Show. Welcome back. We're looking at, and this is good news really for the housing market here, and I think the proxy we're using today is, well, more than a proxy really, is the biggest developer here in the city, Sun Hung Kai, and we understand that it actually sold out one of its first batch of 160 units for a new project within hours. And certainly we have been waiting for rates to fall, and they have really when you look at HIBOR, right? So this is really a story you want to look at. And does this actually last? You know, certainly the conversation within the industry today is how long this actually will persist, that drop you see in HIBOR, because that does precipitate, of course, more sales, because that is where you are getting a lot of your mortgages tied to, as far as that, let's call it monthly pain is concerned whenever you check your bank account. Anyway, that's the story, and we'll see what HIBOR looks like, by the way, in the next hour when the fixing comes out in about this time. There. Very quickly, speaking of down, oil slick. There we go, coming up on your screens. Down on the equity markets, because down, as far as oil is concerned, 3.3 now on the Shanghai contract. Plenty more ahead. Extremely quiet trading session so far, knock on wood, and I might have jinxed it, we'll see. But hopefully, you know, we all need a break, right? So it's quiet on price, it's quiet on volumes. We're still going through some earnings coming through here, but on top of all of that, it's really just, I guess, fatigue, if you think about it, in markets, and really the lack of momentum, lack of catalysts. But again, I might be speaking to you soon. Going into the break, that's just saying that, yeah, take as much time as you can, scroll, have a look at, you know, those gym selfies that perhaps shouldn't be on the cloud. Have a look at influencers talking about how, you know, the 5 things they can't leave home without. Perhaps that will give you something to think about today. And then you can scroll into more important things after that. Look back at news, and so something perhaps will happen here. 31% to the downside here. Yeah, okay, let's talk about the big story today is when you look at oil prices. In fact, we're just looking at that right now. I'm looking at Brent. I'm looking at West Texas right now. NBC is reporting that Iran is willing to commit to not having nuclear weapons in exchange for sanctions relief. Now, of course, this is still a forward sort of looking indicator, if any, but it is indicative perhaps of the, the direction of travel, and if we do get that deal, what it looks like. John Herskovitz is with us, our Bloomberg editor, to talk us through this. And the key points in a potential deal, let's put it that way, outlined by Iran in that NBC report, John. What do we know?
Sure. NBC spoke to a top political nuclear advisor to the supreme leader of Iran. He gave some basic points of what a deal would look like, what Iran is willing to concede, that Iran would give up all hopes of having a nuclear weapons program. It would get rid of its stocks of highly enriched uranium, which are enriched to levels very near weapons grade, that it would commit to having nuclear inspectors on the ground to make sure that Iran is abiding by the contents of its deal, but it also wants to be able to have a civilian nuclear program. So things are kind of similar to the 2015 deal that Trump said was a disaster, but these are the terms that Iran has put forward, and it seems to be at the highest levels that the supreme advisor to the supreme leader is saying this, which may indicate this is what Iran's top leadership is thinking.
And to the point you were making just now, John, if it is those terms that we do see on the table, how likely then is it that President Trump will agree to those terms?
It's really difficult to say. I mean, a lot of these things are similar to the 2015 deal. There's no timeline. There's also, the U.S. has said that enrichment is a red line for it. And it's also like how there's sequencing things. How would you get rid of the uranium that's enriched to levels near weapons grade? So whether the Trump administration accepts this it's really difficult to say, but they said that Iran should not have a nuclear weapons program, that it shouldn't have these enrichment capabilities. It's taken a really hardline position on this. It's put all options on the table. So whether this will be something that's amenable to the Trump administration or not remains to be seen.
Well, it's a good opportunity, certainly, John, to, I guess, look at examples where you have, say, countries with enrichment programs, but not the weapons. What do we know? Like, give us some examples there, if you could.
Sure. I mean, yeah, what the enrichment entails is taking natural uranium and getting an isotope, I think it's uranium-235. For a civilian nuclear program, you want it's somewhere between 3 to 5% of that isotope. And you have countries like Japan, Germany, the Netherlands, which have civilian enrichment programs for their nuclear power industries. Iran has about 275 kilograms or so of uranium that's enriched to 60%. This is like one step below what's needed for weapons grade, which is 90%. And it takes about 25 kilograms to make a warhead. So the worry is that Iran has a lot of this stuff that could be turned into weapons grade material rather quickly. And so you can have the civilian program, which is done in a lot of places under IAEA supervision. But the worry is the enrichment to weapons grade, because it's easier to do. You can do it with more concealment. North Korea is one example of a country that has enrichment programs which are concealed from the outside world and has been using them to make nuclear weapons. And the concern is that's been going on for years and years. Iran is doing something similar, if not the same.
John Herskovitz there. Thank you so much for context and really all the details there. Didn't know I'd be getting a refresher there on that spectrum that takes us from sort of the technology to the potentially nasty. Ellen Wald is with us right now to help us dig deeper into the story here, non-resident senior fellow at the Atlantic Council and president at Transversal Consulting. Ellen, thank you so much for joining us. Good morning from Hong Kong. I don't know, where's your head at? Are we likely to now see a deal, and what do you think, more importantly, a deal might look like?
So I definitely think that this is a much more positive step than anything we've seen as of late, and certainly even anything that we saw during Trump's first term. I mean, during that term, it was really the dismantling of the previous nuclear deal. I think that there are definitely a couple of significant points that we saw, or that we're seeing here. The first is Iran signaling a willingness to talk about dismantling its weapons enrichment program, as well as potentially allowing for people on the ground to view this. This was a real issue, that led to the very harsh sanctions in the first place, is that they were not allowing the nuclear weapons inspectors to actually go into the facilities and confirm that they were not enriching uranium to the levels needed for a weapon, which in fact it turned out that they were doing. So, so that's how all of this, I think, got started. I don't think I don't think it's a coincidence that we're also been hearing discussions about Saudi Arabia going to get a civilian nuclear program as well, and some movement made in that respect. And I do think that makes Iran a little bit more interested in potentially, doing a deal with the U.S. I think that they really have a sense that if they want to take the opportunity to do this with Trump, they've got to do it now, because who knows who it could be in the next 4 years, and who knows what could happen then. And if they can get something going now, there's much more of a potential for it to last beyond the Trump presidency. Whereas with Obama, it happened right at the end, and it was basically overturned as soon as there was a new president. So I do think that time is of the essence here, and that Trump is absolutely motivated to do a deal, but there's going to be a lot of hesitance and reticence on the part of everyone else in the U.S., Republicans and Democrats, to make sure that this is really, that he's not kind of giving in or looking soft. But you also have to remember that Iran is not, it's in some respects a theocracy, but they also have a population to satisfy, and a very important part of that population is the IRGC. And so, they can't just go and say, yes, we're making a deal with the United States. Some people can indicate that, but that doesn't mean that you're definitely going to see everyone jumping on the bandwagon here.
Yeah, I think you make a very, very good point there, because we're just coming off, and I think, if there is anything possible, it's likely possible under this White House. Simply, look at Syria, and I think that, that shift that we saw this week there, for example. I guess on that very note, if we do get a deal, and it does have concessions around the lifting of sanctions, one of the things that you point out is, Donald Trump wants this part of the world to pump more oil. Do you think we will get more Iranian supply hitting this market?
I absolutely think we will. They would like to pump more. You do have to remember that they're a member of OPEC, and so they are going to be bound to follow, the quotas that OPEC has set anyway. I think we're in an interesting situation here because oil prices trend down at the news of a potential nuclear deal because of the potential to lift sanctions. We have to remember that Iran is selling its oil at below market prices, a lot of it to China, and if those sanctions are gone, Iran is not going to settle for these below market prices. They're going to want to, they're saying, hey, our oil's no longer sanctioned. You pay, full price. We're not giving you a discount. And so I think that could be an interesting situation for China, which has really, done very well buying this low-cost Iranian oil.
The trip this week, and we're really spoiled for choice in terms of the stories coming out of the trip, out of the White House, Donald Trump, of course, in Saudi. What stood out to you the most? What do you think is the most important shift that we saw this week? Most important development?
No, I think what's important is that, really they haven't done much in terms of oil. There's been some kind of energy discussions, but mostly we're seeing it about investment. They're looking for trade deals. Right. Trump is looking to get, to see the Saudis, making large purchases of American goods. Same with the Qataris. I mean, they just, they want to buy a lot of jets. They want to buy, computer chips, things like that. And we're not seeing a huge push for, say, pump more oil, produce more oil. I think really the first we heard of it was Trump saying, hey, I'd love it if oil prices were between $40 and $50 a barrel. Does that mean he's going out there trying to get that? No. That can be his ideal oil price for American consumers, but that doesn't mean that he's going to get that or that that's the ideal price that the Middle East wants or that American producers want. He can say that, but there's really been no effort to kind of push any kind of oil production or supply plan here.
Yeah, I mean, those are... that's an interesting Venn diagram, if you think about it, where Trump needs oil to be and where OPEC is willing to have oil prices in the low 60s in Brent. Do you think that satisfies both those conditions?
I think that most people are pretty okay with that. I think, American producers would probably rather, to see a slightly higher because, WTI tends to be lower than Brent. They'd probably rather it be a little higher. The Saudis are fine. They're going to be fine no matter what. If, Brent is $60 a barrel, the Saudis are still making more money than anybody else. And I mean, Nasser, the CEO of Aramco, basically, he said that. He said, the lower they go, he said we're best positioned to withstand that. So we're not particularly worried here. I do think an interesting place to keep an eye on is LNG, because you've got some Middle Eastern countries, Bahrain and Kuwait, that are really interested in buying LNG from the United States. And you also have Middle Eastern oil companies that want to buy stakes in American LNG companies. And Trump from day one has been really big on approving these LNG plants. The U.S. sells more LNG. I think that most people assumed it's going to go to Asia, it's going to go to Europe. They're not necessarily thinking it's going to the Middle East and that these countries are interested in the U.S. LNG market, but they are. And so I would definitely look to see some of these, deals in LNG coming out of this trip.
Ellen, thank you so much. Have a great rest of your evening there in Florida. Ellen Wald there, non-resident senior fellow at Atlantic Council and the president at Transversal Consulting. Right, big one in India, big news here. 2.9 billion, Reliance getting that amount in loans here. Biggest one in India since 2023. More on that in a moment. Plenty more ahead. This is Bloomberg. Welcome back. You're watching The China Show. Some corporate headlines that we're following right now. Hong Kong property developer New World must decide whether to redeem a PERP, perpetual bond here, before June 16. Now, Bloomberg has calculated that if the company does not redeem the note, a $345 million one, before the deadline, its interest payments will jump to more than 10%. Now, New World has to give at least 30 days notice if it does want to exercise that option at a lower rate. Now, the other big news, of course, here in Hong Kong, Hang Seng Bank is said to have laid off some staff under a restructuring led by its parent firm HSBC. The South China Morning Post says some departments lost 20% of their employees. According to that report as well, the affected units were in supporting departments such as corporate communications. Now, HSBC is currently embarking on a global restructuring program, of course. It has seen the lender shutter some businesses and slash management ranks. Right, that takes us really nicely into this next story we're about to talk about. The job market picking up here in Hong Kong, broadly speaking. Front office, investment bank, we talk about all these deals and IPOs coming through in a tentative sign of a recovery here. You have the number of licensed professionals increasing about 0.5% in Feb from the end of 2023. We have Francis Chan, our senior analyst at Bloomberg Intelligence, here with us on set to talk to us about, why don't we start with the good news here? Investment banking is starting to show signs of picking up here.
Yeah, in fact, during a period in 2022, we do see the Type 6 licensing, SFC licensing in Hong Kong drop by almost 3%.
What's Type 6, just for background?
It's the license for corporate finance activities.
Okay.
So that obviously, is aligning with the stock market performance, the declining IPO equity fundraising activities in Hong Kong. We see pretty much a stagnant trend in 2023, but from the end of 2023 to February this year, at least for the data we got, we see a silver 5% increase during the period. And it's a good sign because it has been shrinking in response to the weak stock market in Hong Kong and geopolitical reasons. Now it's no longer the case. We see some rehiring of bankers which were laid off before, and many of them by Chinese brokers. And more importantly, some senior hires by Chinese securities firms or investment banks.
Okay, yeah, so here we go. The job changes we're seeing in the banking from Feb 2025 from, I think, 5 years before. Just to ask you as well, you have any reaction when you saw the Hang Seng Bank news and the job cuts there? Like, how significant is that, or is that minor and just on the edges here?
Well, it's obviously positive news to shareholders, and it's not to anyone's surprise because Hang Seng is part of HSBC's Hong Kong operations, a core part of it. HSBC's newly set up Hong Kong business operation, they are supposed to have a pro forma return on tangible equity of 38%, which is a crown jewel for the firm. So Hang Seng will tag along to revamp its business with some layoffs, which makes sense. And also, Hang Seng Bank's ROE has been declining over years. Its trading valuations in terms of book value has been coming down from 2 to 3 times to now a bit more than 1 time. So to shareholders, we may look for a bit more cost savings from this move.
Yeah. All right. Francis, thank you so much. Great work there from Francis. You can check that out on your terminals. It's also sort of this broader picture coming through from our colleague Kathy Chen, who's also put out that sort of broad picture note here on IB. Yeah, more finance bros in those vests. Why not? Can't get too much of a good thing. All right, Insider's Guide to the Money and the people shaking up the finance hub here in Hong Kong on your screens coming up. There you go. That's a nice cover of the newsletter coming out. So it's every Thursday. And guess what day of the week it is? You can sign up Bloomberg.com/newsletters. Plenty more ahead. This is The China Show. Welcome back. Bill Dudley, the former New York Fed president, says while the U.S. and China have dialed down some of the tensions and tariffs, many unknowns still remain. The Bloomberg opinion columnist told us that the U.S. central bank, that's the Fed, has no choice but to wait and watch despite pressure from President Trump to cut interest rates.
They don't know where the tariffs are going to land, number one. And two, they don't know what the effects of the tariffs are going to be on growth versus inflation. So they're uncertain about two dimensions. So they can't really just sort of flip a coin and say, oh, well, we're going to worry about the growth dimension because that could turn out to be wrong. So they have to sit and wait for more information. I mean, if you were driving a car in a thunderstorm, you wouldn't just put the car on autopilot and hope that you would get through it safely. So you pull to the side of the road until the weather cleared up, and that's what the Fed has to do. The Fed is going to be criticized for waiting. They have to wait, and because they're waiting, they're probably ultimately going to be late. But it's not the Fed's fault. I would behave exactly the same way in this set of circumstances.
But what's their definition of late? And what's your definition of late? Because he reflected on the move last summer, and he said, in some ways, we were a little late. And other people thought he was being preemptive. What's late to you?
Well, I think late is responding only after you've seen a sizable increase in the unemployment rate, because at that point, it's really hard to avert a recession. You know, when I evaluate the risks to inflation versus the risks to growth here, I guess I worry more about the downside risks to growth. But the Fed can't put all their marbles on that side of the equation, because inflation's been running above the Fed's target for 5 years, and if they're wrong, and inflation expectations get unanchored, then it's a really difficult problem getting inflation back down. So I think they have to wait. Because they wait, because they'll be forced to wait, they'll probably be late. Trump will blame the Fed for being late, but the reality is Trump created the conditions that forces the Fed to have to wait.
Bill, I'm just curious, going forward, how much you see the Fed unwilling to move, even if the unemployment rate rises by 0.5 percentage point, which is sort of the trigger that a lot of people are looking at, if you do see those inflationary pressures coming back?
Well, I think if the unemployment rate rose by, above 4.5%, that would change the Fed's calculus. They would be much more worried about the self-reinforcing deterioration in the labor market leading to a full-blown recession. So I think the unemployment rate is really the single most important indicator. If it stays around where it is today, Fed's going to just sit and wait. If the unemployment rate starts rising quickly, then the Federal Reserve will start to respond. But I think it's going to take some time. I mean, the hard data on the economy shows that the economy is still just fine. I mean, the first quarter GDP report was very misleading, because it was mainly the fact that that they couldn't count inventories properly to match up with the big surge in imports.
That was Bloomberg Opinion columnist and former New York Fed President Bill Dudley, of course, there with John Farrow on the path of rates moving and the timing as well. What is late, which is a very fluid concept, of course. Right. Trending in China, let's have a look at what else is making headlines in national newspapers within the Chinese media space today. The People's Daily quoting analysts warning that businesses should maintain a measured approach to the recent thaw in trade tensions between both sides. And it argues that uncertainty still surround the sustainability of a deal and also of future negotiations. Now, this editorial in the China Daily, meanwhile, says that the U.S. should stop trying to curb China's high-tech progress. It also points out that Washington's China containment strategy has forced the country's tech sector to become self-reliant. Yeah, and that self-reliance, I guess, perhaps is most obvious when you look at the likes of how the EV space, the chips, semiconductors, and the Xiaomi story certainly is one of them. Just to underscore that very point. In fact, Xiaomi is one of the movers we're tracking at this point in time. Let's have a look at that, please, if we have it. Coming up very shortly on your screens. There we go, up about 1.5%. Although the story here is the incidents of late have showed up in some ways on EV sales because of some of those issues as well. It's worth pointing out Shawn Yang out of Arete. This is really one of his top calls as well, Xiaomi. I think he raised his price target for the stock there. Right. Tencent Music. Tencent was out with earnings. Tencent Music a day before that. NetEase and Alibaba are coming out next few hours or so. Tencent has been hovering around these levels. Opened around 5:30, maybe 5:35. It's since pared back. Tencent Music is still dancing to that music. And in the next hour, you'll watch for HIBOR. And on the back of Sun Hung Kai reporting, our reporting, it sold out homes in hours as rates fall on the HIBOR story I just mentioned there. Plenty more ahead. Insights is coming up next.